Imagine never having to wait in line at a bank again. No paperwork, no third-party approvals, just you, your phone, and complete control of your money anywhere in the world. Welcome to Decentralized Finance, or DeFi, a groundbreaking system that's rewriting the rules of money, investing, lending, and more. In this video, we'll dive deep into how DeFi works, how it compares to traditional banking, its risks and rewards, and how you can start using it, even if you're a complete beginner. Let's start simple. Traditional finance, also called CFI, or centralized finance, relies on intermediaries. Think banks, brokers, insurance companies. They hold your money, charge fees, and make decisions for you. Need a loan? You'll need credit history, proof of income, maybe even collateral. The process can take days or weeks with no guarantee of approval. Now imagine this. You connect your crypto wallet to a platform like Aave or Compound, choose how much you want to borrow, deposit some crypto as collateral, and boom, you get your loan within minutes. No bank manager, no paperwork, no bias. That's DeFi. It's a system built on blockchain technology, which is a public decentralized ledger that records all transactions. Instead of human middlemen, DeFi uses smart contracts, code that automatically executes financial transactions when certain conditions are met. A smart contract on Ethereum might say, if user A deposits $500 worth of ETH, let them borrow $250 worth of USDC, and it'll execute instantly, no questions asked. Benefits over traditional finance include being open 24/7 globally, no credit checks, and no borders or red tape. However, disadvantages include more responsibility on the user, a steeper learning curve, and the risk of bugs or smart contract failures. At the heart of DeFi are three things: blockchain, a decentralized network that's secure and transparent; smart contracts, self-executing agreements written in code; cryptocurrencies, digital tokens like ETH, USDC, DAI, etc., that power the system. Think of a blockchain like a massive public Excel spreadsheet, but one that no single person can change. Every transaction is time-stamped and verified by thousands of nodes. In traditional banking, your transaction history is stored on your bank's private server. If they go offline, get hacked, or make an error, you're stuck. With blockchain, everything is decentralized and immutable. You can verify your own transactions. Let's explore some of the major DeFi players making waves. Uniswap, a decentralized exchange, DEX, where you can swap one crypto for another, peer-to-peer, no account needed. Aave and Compound, lending and borrowing platforms where users can earn interest or borrow assets by locking crypto as collateral. MakerDAO, a platform that lets you create stable coins like DI, which are pegged to the US dollar. Yearn Finance, a yield optimizer that automatically finds the best interest rates for your crypto assets. Traditional savings accounts offer 0.01% to 0.1% APY. In DeFi, it's common to earn 5 to 15% depending on market conditions. Some high-risk strategies even offer over 50%, but they come with volatility. Let's break it down. Transparency. All transactions are on-chain and auditable. Traditional banking, you never see what happens behind the scenes. Ever wonder how banks invest your money? You don't get to know. Security. So, with proper self-custody tools like hardware wallets, you hold the keys to your money, not the bank. Accessibility. With just a phone and internet, people in unbanked regions can now borrow, save, and invest. That's huge. Innovation. From synthetic assets to decentralized insurance, DeFi is building tools traditional finance hasn't even dreamed of. Now let's talk real. DeFi isn't perfect. Smart contract risks. A bug in the code could be exploited by hackers. Millions have been lost in poorly audited protocols. No customer support. In DeFi, you're your own bank. If you lose your keys or send funds to the wrong address, there's no undo button. Scams and rug pulls. With no regulation, some projects are outright scams. Always research before investing. Volatility. Crypto markets are wild. Prices can swing 20% in a day. This affects your collateral and loans and your earnings. DeFi isn't just for tech geeks or crypto bros. It's already being used in the real world. Freelancers in Nigeria are earning stablecoins to bypass inflation. Small businesses in Argentina are using DeFi to store value in USD-pegged coins due to currency instability. Young investors in the US are using platforms like Uniswap to diversify outside of stocks. Want to get started? Here's how. Create a wallet like MetaMask. Transfer some ETH or USDC to it. Connect to a platform like Aave or Uniswap. Start exploring with small amounts. Pro tip: never invest more than you can afford to lose, and always DYOR. Do your own research. DeFi is evolving fast. Here's what we may see next. Decentralized ID systems to improve security. Mainstream banks partnering with DeFi protocols. More regulations to protect consumers. Mass adoption via mobile apps and better UX. One day, your mortgage, savings account, insurance, and investments could all live on a blockchain, fully transparent, secure, and under your control. Decentralized finance is more than a trend, it's a movement. A movement toward freedom, toward transparency, toward financial equality. Whether you're a curious beginner or an experienced investor, DeFi is opening doors to a whole new financial universe. Let us know in the comments what excites you most about DeFi. Don't forget to like, share, and subscribe for more future-focused content on money, freedom, and technology. See you in the next one.